It's quiet out there, so just look up into the sky. There's not much activity coming from the sun. So the geomagnetic disturbances these days are quite calm, quiet. Not much going on in the sky right now. So what does this mean in terms of cycles? What does this mean in terms of the US stock markets? You're watching Cycles TV, and we're here at the Foundation for the Study of Cycles to discuss cycle analysis live in real time. My name is Lars von Thienen, and as always, we are live on Monday. So welcome to the show. Today, I will talk about a special subject, which is about geomagnetic disturbances and any cycles out there. So join me for the next 20 to 30 minutes and we will get a quick update on geomagnetic disturbances, the impact on the US stock markets, and why cycles are also important in that special data set. Let's jump right into it and let's just discuss a quick start on that. If we talk about geomagnetic disturbances, so what the heck are we talking about? Let me give you a quick primer on that. So to have a very simplistic view, what we're discussing today is that coming from the sun here in the upper right, we have sunspot cycles and charged particles which come from the sun, especially in those times when the sun disrupts or sends geomagnetic storms into the orbit, which result then in our atmosphere here down on Earth, which will impact in the magnetosphere. So the geomagnetic influence on Earth, especially related to the Schumann resonant frequencies of our planet, which will then transfer or have an interaction with the ionosphere, which is the near field of the Earth, and the charging and the charged particles, which will be influenced by those sunspots which hit the Earth, then have an influence in the magnetosphere and ionosphere, where the charged particles interact with with our planet. And as human beings living in this geomagnetic field, if there are changes to the field of the geomagnetic standard setting we have, which is surrounding us here on Earth every day, if this gets disrupted by charged particles coming from the sun, it has an impact. It has an impact on our human body, especially how our brain operates and special effects in our brain, and for sure in our core region, which impacts our health here down on Earth. There are a lot of studies out there, medical studies and other studies, who can reveal and explain those impacts. For today, we just need to be aware of that there is an impact on the solar disruptions which happen out of the sun. They come down to us on Earth. They influence with charged particles the magnetosphere and ionosphere, which influences something in our body, and that influences our decision-making process. So we cannot feel it in terms of temperature or in terms of weather. So that's what it makes it quite hard for us as human beings to feel that space weather, but it is there and it has an impact. Okay? Very simple story, made very short. So now we can measure that impact. We are able to measure what happens here with this geomagnetic data. And if you think about, or if you're new to the subject, we are talking about the so-called KP or AP index. And again, to make a long story short, it is measured every day on a lot of stations around the globe. The NASA is publishing this data, but Nobody knows what you will do to this organization over there in the US. So good, we have also something here in Germany. The good old Helmholtz Center for Geosciences, which is a science institute here in Germany, also is publishing that data like you see here. And as we're talking about cycles, you will find the name of Julius Bartels, who introduced the way how to measure geomagnetic disturbances. So isn't there a link already by that name? I mean, if you're in the cycles community, you will remember Bartels, as he invented the test for statistical significance, which is also used to validate the existence of cycles. So it's the same guy, the same German engineer, by the way, who introduced the Bartels test of significance, which is a major milestone in the cycles community, also invented a way how the geomagnetic disturbances should be measured around 75 years ago. So we talk about the same person. Quite interesting, by the way. So Julius Bartels also introduced the technical science how to measure geomagnetic disturbances, which is up to today the way geomagnetic disturbances is measured outside, and we get the data every day. Isn't that great? So yes, it is measured. Everyone gets that data. Nothing secret in that data. And as you see, that's the values for today. That's what I said. It's quite calm, quiet out there. No real major disturbances out there. So that's the raw data. That's the basics. Okay. Now coming to the cyclic perspective on that. As we can measure all that kind of stuff, that's great. And by the way, here's the raw data. So you can read that data into any analysis application or any platform you want. I mean, it's not the obvious stock market data, but you will find the raw data, which then can be analyzed later. And by the way, that raw data is not really helpful. Yeah, you need to pre-process that data. As always with cycle analysis, you need to find a way to prepare your data. I will not reveal and not talk about the pre-processing of that data. But if you get the noise out, if you can smooth it a little bit, so in simplistic terms, then you will get a data set which is more usable in terms of cyclic analysis. And it looks like this way. And as said, today I will not talk about the pre-processing. You have the data, you need to remove the noise, and then you have your raw data. So, and now it comes to the point, I mean, there are two topics I want to talk about today. First, can we use geomagnetic disturbance to get a clue on the US stock markets? As I said, it influences our decision making, it influences our human body in certain ways. There could be also something seen in the US stock markets if it influences the behavior, how we judge risk, in terms of financial decision making. And if that's the case, we should also be able to see the outcome of changes in geomagnetic disturbances in the US stock markets. Question one, I will get to that in a minute. Question two is, and I mean, we are here for cycle analysis. We are not here for having the general analysis. The second, most important question then is there a cyclic behavior in geomagnetic disturbances? And that's something really unique to us here at the Foundation, because this was not really researched outside of the cycles community. I mean, you can argue, yeah, there's this 11 years solar cycle, which is true. But that's common knowledge. That's not what I mean if we talk about cycles. Is there shorter term cycles in geomagnetic disturbances? That's the second question. So that's the two topic. So let's start with the cycle analysis on that data set first. And then let's see if this is something which helps us also, which can be transferred to the stock markets. So question one comes first. Is there a cyclic behavior in geomagnetic disturbances? Got that question, right? Okay, so let's jump to the pre-processed data here. So as said, that it's the pre-processed geomagnetic data using a longer period here, 2000 bars, but we can change that later. And at the bottom, you see the spectrum, right? So, and that's the interesting point here. Yes. Yes, there is a clear peak in the spectrum. Yes, there is a cycle. There's cyclic rhythm in geomagnetic disturbances. Not the solar cycle, 187 to be specific. Let's call it nominal 180 calendar days in that case, because this is a calendar day cycle analysis. So yes, there is a cycle. I mean, there is no discussion about it. If you have that scientific measurement in a spectrum, yeah, with this huge amplitude, clear separation to the left and the right, so there's not really much uncertainty for that dominant cycle with that given length compared to maybe shorter ones here on the left or right, or even a short blip here. So it's quite clear. And if we even have a long-term analysis for the past 15 years, this is how the cycle analysis looks. So not just using shorter period, which I showed you live in our spectrum analyzer. This is just over 15 years. You will clearly identify this peak in the data series, right? So who will discuss with me that this is not a real cycle in that behavior? So please get back to me. That is quite obvious. However, it was never published. So I mean, I think this is one of the first discoveries here we are doing at the foundation also, to also bring to the public science community, there is rhythmic behavior in geomagnetic disturbances on a shorter term cyclic basis. Yes, there is. Okay, it will be a longer discussion on the cycle analysis part, but just for us now, we could assume, we can take it as a given, as a fact, there is cyclic behavior. Now back to our cycle scanner for the data set, so that you really see that's our pure cycle analysis framework, how we are doing that with the same tools we apply on stocks or financial data. So let's activate that 180-day cycle. Let's overlay that for now just on the geomagnetic data. So you see it's quite in sync with major peaks and bottoms of that data series. Yeah, I mean, quite obvious. For sure, it was detected in the scanner, and for sure, if you overlay it, yeah, geomagnetic disturbance seem to follow a shorter cycle out there. Okay, so that's on its own is a discovery with requires and needs more discussion in the science community out there. For us now, here and on that channel, as we often want to relate those cycles also to financial markets, and we use financial data as a kind of measurement, a kind of another data set, if that influence then to our humans, so I showed you also in the beginning, there is a connection between that cycle, geomagnetic disturbances, and how we are impacted. So there is a cycle out there, a dedicated cycle coming from the sun, solar disruptions, introducing geomagnetic disturbances on our planet Earth, impacting us and human beings. They are not at all random. They are not random. They are cyclic. So we can use that cyclic information to identify when we, human beings, will be impacted the most at the peaks of that cycle, and when will we impacted the less. So we can see that on a cyclic perspective, and we are now able to project the times when we will be impacted the most, peaks of the geomagnetic disturbances and when we will not be impacted so much, because from a cyclic perspective we expect geomagnetic disturbances to be low. That's the perspective of cycles. Okay, question 1 answered for now. We have a cycle, we can measure it, we can predict it, we see it in the data, we know that we as human beings are impacted by that force. Now, second question. Is there anything from that information which is also to be seen in the financial area? So, if we are influenced, is our decision-making process, our risk-taking process, as everyone is making decisions on financial conditions and is then making decisions maybe how to invest or de-invest, is this visible in the US stock market, right? Second question. Let's get back to that. So let's start. I will also make that long story short here for us today. Let's get back to 20. Let's get back some time ago, because I mean that discovery, I did this 20 years back, by the way, and I've partially spoken on that. If you know me, or if we have met on some meetings or sessions on that, you might remember talking me on that. So therefore, let's go back into 2014, 2015, and I will show you exactly that 180-day cycle, which is coming purely from the geomagnetic disturbances at that point in time. You will see that at the bottom, and then we will see how this relates to the US stock markets. So let's make it big right away. So at the bottom, let's start here. Let's just look at the bottom. So this zigzag cycle is the nominal 180-day cycle, which was coming from geomagnetic disturbances during that period. So we are talking about the period 2014. And if you might ask, why are you picking 2014? 2014 is approximately 11 years ago. So 11 years back was the last time when the solar cycle peaked. Okay, so that's another cycle. So a cycle is within cycles. So the longer term cycle is 11 years, but it's nothing we would use for trading. But in that period, so the last time when we had the solar cycle peaking, 2014, that's most important times when to look at the shorter term cycles of geomagnetic disturbances. And that's exactly that period. And this was the solar activity in this zigzag plot you see here. I've just overlaid it to an RSI indicator, which I don't want to discuss this. But now at the upper part of that stock chart, you just see the turning points. I mean, you know, we're discussing here time-based cycles. Yeah. So, I forgot something. Sorry, it's not scripted, but before we correlate that to the stock markets, I need to talk about one important subject here. So I need to step back before we discuss the cycle which is shown on the bottom. Because first we need to discuss what is the understanding, the relation of that geomagnetic influence if we map it to the stock market. As I said, we are influenced in some way when we have a high geomagnetic disturbance and low geomagnetic disturbance. But how do we judge this in terms of our decision-making process? And therefore, I will show you now in another chart. You need to see it similar to how we react to changes in temperature outside. So temperature, you can measure it as an absolute value, 10 degrees, 20 degrees, 30 degrees Celsius, outside temperature. But your human body will respond to it in a relative way. So the absolute value is 20 degrees hot or 20 degrees cold. Depends for your human body what was the condition before. So if you're coming from an 16, 17 degrees Celsius temperature, and entering into 20 degrees Celsius inside room temperature, it will feel warm. So you say, it's warm. If you're coming from an outside temperature of 30 degrees Celsius outside and entering indoors 20 degrees temperature, it will feel cold. So the absolute value of 20 degrees could be cold or could be warm. So that's why the absolute value of geomagnetic disturbances does not play any role, because it just matters what was the condition before. So your human body just reacts to the relative changes, not absolute values. And therefore think of geomagnetic disturbances similar, at least the impact as we respond as human beings, to temperature changes. And if we now want to map that on the stock market, we need to think about this behavior. So here we see the AP index as we measure it and as we have a cyclic behavior. Let's assume those are the cyclic tops and bottoms of the geomagnetic disturbances. But now we need to take into account a top in geomagnetic disturbances. So high impact from the geomagnetic data on our human beings is a top here. But this means we have an extreme geomagnetic activity. And as the health and medical research studies suggest, this will set us into the most negative mood. So we will feel bad. We are not open to risky discussions. So it's the most negative influence on our human health and emotional sentiment situation. That happens at geomagnetic tops. So we don't feel good and comfortable at geomagnetic high disturbances. Which means from this point in time, our sentiment will only get better. That's the relative thinking now. So from an interim time-based local maxima, where we really feel bad at that point in time, so high in geomagnetic activity in a short-term period, will indicate that we are at the worst emotional sentiment, negative mood situation from this point in time. So high in geomagnetic activity, when geomagnetic disturbances will get lower over time, we will start to feel better and better and better. This means, and also vice versa, if we have the lowest point in geomagnetic activity, right? So in the relative near past, that's the most positive sentiment we can have. So we are not impacted anymore by geomagnetic activities. This is our normal state. The best condition, as we will not feel hot, we will not feel cold. We are quite comfortable. It's the most comfortable emotional point of view. We are not really influenced. So this is the most positive mood. So from this point in time, it can just get worse. It will not become better any time. So from that local point, it will get worse and worse and worse. So transferring that to how we make financial discussions. If we already feel the pain of geomagnetic activity, this is the point in time when it will get better. This is the point in time when more and more people will be open to more risky discussions, feeling more comfortable about the future outlook, will get more invested into future risk and decision-making process. So this in general should be then an interim market low. At that point, we want to buy. We want to get in a high in geomagnetic activity. And vice versa, if we already have the most positive mood possible, as geomagnetic activity will just rise from there, so it will not really get better at that point, we want to get out, because people will start to feel worse. They are not really open to future financial risky investments. They are very cautious. They maybe will pull back their money. Market will go down. So we want to sell at that point. So that's just the primer I need to make how to read the geomagnetic, or at least that's the hypothesis, how to use that data. So long story short, tops in geomagnetic activities are bottoms in the stock markets, and bottoms in geomagnetic activity should be tops in the stock market. So similar to how you read sentiment indicators, right? It's exactly the opposite. So it's similar to sentiment indicators. Now back to the stock market chart. Here we are. Here we are. This is, and sorry for the interruption, but this was important. And because the 180 geomagnetic day cycle, which I've talked about here, is inverse. It's inverse shown here on that chart. And I needed to explain why we use the inverse cycle if we overlay that to stock market data. And now to see the correlation to the stock market, which is here on top. So this was a low in geomagnetic activity, shown inverse here. So top in the stock market. So I've highlighted those points in time with this yellow linear line. If you would have just purely sell those geomagnetic activity dates, this is how it correlates to how the stock market behaved during that period. Just trading the geomagnetic cycle. The cycle plotted here has nothing to do with financial data at all. Nothing. Nothing. Yes, nothing. It's just the 100 days geomagnetic cycle, which I've shown you here. It's this cycle. This cycle plotted 2014, purely geomagnetic information overlaid to the Dow Jones Industrial Average here, right? Quite interesting, isn't it? So, second question answered. Yes, yes, we can identify and see that human body decision-making process related to financial assets can be seen in the major global indices. Pure geomagnetic disturbance cycle. Nothing else would be profitable. All right. Fast forward to today, right? We are living in 2025. By the way, the next top of the solar cycle, which is the long-term cycle. During those times, you expect the most disruptions anyhow. So cycles within cycles. It makes sense to make use of that knowledge when the solar cycle tops. Yes, we are living in those times right now. Okay, if you're a cycles guy, you know what I'm talking about. But anyhow, let's fast forward into 2025. I've talked partially, maybe you have seen that cycle here already. And by the way, let's do this first in the scanner before we go back to the stock market, right? So here we are again. So we again, with latest data, so that's not an average. So we are now living here July 2025, 27. So with the latest data from yesterday process, with the cycle analysis, we again identify the cycle 187. So yes, it's still there. We have the cycle we know about. So we can be happy. And now, have a look. Have a look. Where are we in that cycle? It's so beautiful. Where are we in that cycle? Do you see it? I mean, it's obvious, isn't it? So we are at a special situation now in the geomagnetic disturbance cycle. It's so calm outside. And we expected that. So maybe you can now come to your conclusion on your own already. If we have a geomagnetic cyclic disturbance low expected these days, second half of July, with that knowledge, which I just presented, what does this could, not what does, what could that mean in our financial decision making, reflecting that to the US stock markets? Maybe you have the answer already. Maybe you can stop here. Have a nice day. Or just stay with me for another 2 minutes. All right. So, and by the way, I did this analysis back in 2024. I revealed that cycle here partially. If you're part of the master working group, we discussed that cycle in our master working group. So as said, more to discuss, but I will keep it short for today here. So this cycle is bottoming. That's why I put this session out today. We are the foundation for the study. We have nothing to hide. We put our knowledge in front of the public. That's why we are here. Let's now map that cycle to the current data of the US stock markets. Okay, same procedure as always. Let's start here at the bottom. And by the way, if you know what I'm doing here, we have the 186-day cycle here shown at the bottom as this triangle plot here, inverse. Yeah, again, inverse. I made that analysis back in summer 2024, so over a year ago already, as you see by the purple line here. So the purple line is an out of sample projection, but anyhow, that's not what I want to talk about here today. That purple projection is the same if you would do the cycle analysis today. So inversely correlated, so over a year ago it gave us mid-July as a low for geomagnetic disturbances, shown inverse here, meaning a top. Today it has shifted quietly to the second half, so let's assume it had 1 or 2 weeks shifted to the right, but that's anyhow what happens in cycles. But anyhow, we are at the same point in time. By the way, again, it's plotted against the RSI, which you just see the expected bottom. So this was the previous top of the geomagnetic disturbances, yeah, expecting a bottom, which was in April. So, and if you now go back the legs of that cycle, which I've just put here at the top of that chart, you would see, and if assume, I mean, I've done this 2024, so the top of the major stock markets back in July 2024 came exactly at the geomagnetic bottom, inverse shown here as a top. And then October, we here had the geomagnetic high, low inverse, so this is a buy. Then here the expected low, meaning a top in the stock markets at that point, and then expecting already. So the bottom in April was seen for a long time, just purely that down leg. Also the end of that down leg expected to come in April was seen already a long time ago just by geomagnetic cycles. And now you see the beauty of that up leg here is it's quite running on rails to the current leg of the geomagnetic cycle, which is now reaching its projected bottom, projected geomagnetic bottom, inversely shown as a top, meaning we should expect possibly another top in the financial markets due to the fact that from this point here, it's very calm outside, not much happening. It will get worse from here. We will again start to feel more worth here. We would not have better conditions than today from the perspective of the geomagnetic disturbances which influence our human body. it will really not get better than today, which means that from this point of time, we will feel more worse, we will have impacts on our financial decision making as it has been on those points in time before. All right, again, running 30 minutes here. That's a fascinating story on cycles, isn't it? I don't know if this will repeat. I do not recommend anything to anyone. It's an observation I'm personally following for, I think, over 11 years now. That cycle is and has been really helpful, not only for me, not only on financial markets. You will find not the cyclic perspective. You will find a lot of knowledge if you do your own research on geomagnetic disturbances and the human body out there from a science perspective. The cyclic perspective is new and is unique, which is coming from the Foundation for the Study of Cycles. And that's what I just wanted to bring to your attention. We talked in depth about that situation and the background in New York, in our conference, in the Master Working Group. So we share those findings with our members here at the Foundation. This was just a quick and hopefully fascinating summary also for you out there. As we are live, for sure, I'm happy to take some of your questions today. So let me know. Switch to the chat section and let me get monitored if you have questions for today. That's the purpose or the benefit of if you are live with me here today. So give me a chance. Hope Pantasias. Any correlation with the volatility index and geomagnetic data? Very good question. I cannot answer that on point. But I hear saying, as we're talking about a kind of sentiment information, sentiment data, which is the fear index or the VIX index is also often used. I would look out for situations when cycles in the volatility index speak the same language as this 180-day cycle. So I would view for maybe not a correlation. They don't need to always fit, but it would be interesting right when you identify a cycle in volatility index data and geomagnetic data, then you have an additional confirmation on the same idea of fear and sentiment, just measuring fear and with the volatility index and financial data set and measuring fear and sentiment in the human body coming from geomagnetic disturbances. If that fit, you would have even more confidence. If there is a perfect correlation, I'm not sure and I cannot talk about that. I want to stay with the question on the subject Francis. That's correct. And therefore, the ionosphere is part of our current environment, which the geomagnetic situation, so we always have a geomagnetic field around us, which is part of our space of living, and that geomagnetic field we're living in, similar to the weather, similar to what we see as light, what we feel as weather, the same with geomagnetic. So we need it, and if it's disrupted or if we don't have it, we will have hard times without geomagnetic information. By the way, you might also all be aware of how different species need the geomagnetic and the magnetic field around us to navigate and for other certain topics for some biological species out there. Like the emergency ward in hospitals get overactive on full moons. Not related to full moons, but in hospitals you will see a huge increase in heart attacks during times when you have very strong geomagnetic disturbances. So if you're working in hospitals, you will have that peaks in certain medical conditions, and that's where you find a lot of research. So I would not relate that to the moon because it's sun-related impact, but you can also measure that impact in hospitals. Thank you, Smiles Are Good, for your recommendation on another book here. I will cross-check that just after the show. Looking manually, I see significant S&P falls at solar troughs, but also sometimes at solar peaks. Yeah. So if you refer with the solar thoughts and peaks to the solar cycle, so the 11-year solar cycle, I also think that's not really useful. The solar cycle with 11 years is too long to just map it to the S&P. So therefore, I would not advise to use the 11-year cycle, the solar cycle per se, as indicator for the stock market. Yeah, that's the larger cycle, Ron. So now you can look at the NOAA data, which also refers to the solar cycle and geomagnetic data. As said, so a solar peak is happening right now, or has happened just right now. So the solar cycle peak 2025. That's the 11-year cycle. Go back 11 years, then you are coming to 2014. So that's the period when I showed you that shorter term cycle behavior. And then the half of 11 years is 5.5. So subtract 5.5 from 2014, and you might arrive at 2008, which is then a solar through anyhow. So that's the solar cycle. But as said, that's a very long-term cycle. You won't find direct correlations to the market. So I think that these have been your questions related to the subject of today's sessions. You have some different questions related to cycle analysis. So I want to value your time as you're here live. So I want to value your time spending with me, with taking some time for your questions. How can we know and confirm a cycle has already topped or bottomed? Kevin, it's an important question. So one method I would recommend in the cycles community is the future line of demarcation, so the FLD principle, where exactly as at the half time of the up leg or the expected down leg, the FLD technique will give you confirmation if that top has been happened or that bottom has been happened. I mean, the confirmation will come late. So the cycles technique shows you in time this should be a top or a bottom from pure cycle analysis. Then theoretically the next up leg or down leg will start, and the FLD technique will give you a confirmation once half of that down leg or of that up leg then has passed already. You will get the confirmation, yes, that was a bottom, and then you can expect another half of that up leg or down leg to continue. So the future line of demarcation, which was introduced by Hurst, is a concept then working on price, not on time. So you use the price, which is following a theoretical peak or theoretical bottom, shift that forward. That's the principle of the FLD. And if you have a crossing at that expected point in time, then you have a confirmation that the cycle really has topped or bottomed. So use the future line of demarcation for confirmation of detected cycle tops or bottoms with the cycle analyzer. As always, the confirmation will come with a delay. So you have missed the part of that cyclic move at that point in time. Hope that helps, Kevin. Fritz, since developing the stability score, are the in-sample correlation score and visible range score not as relevant? Yes, correct. I never really liked the correlation scores. I never liked them. So with the stability score now, you could completely ignore the correlation score of a simple cycle shown on that chart, because trying to build a correlation between price and one specific cycle, I often told that it's quite useless, because we use the cycle only for timing, not for price movements on the y-axis, but correlation will take both into account. So I always say, don't use correlation between price and cycles. The stability score is something different, right? So we extract the cyclic component of the real price and correlate that to a theoretical cycle. So yes, stability score is much better, and therefore the correlation score, which is shown in the cycle, is not as relevant. I know a lot of people look for that. I have never been a fan of that. And you're right, you can disregard the correlation score for the visible range. Emilio, hi Lars, I have a theoretical question. In regard to cycle analysis tools, what are the differences between using detrended price oscillation and very important terms you're using here. So, but I think they won't match in that sense how I got your question. So the Fourier transform is the way or the framework to detect cyclic behavior, frequency, in a data set. The detrended price oscillator is, as the name says, is just an oscillator which takes out the longer term trend. And it's not the same. So by far, it's complete different things. So you cannot exchange the Fourier transform with the detrended price oscillator. What matches between those two terms you're using? So a detrended price oscillator might be a good input for the Fourier transform. So because applying the Fourier transform just on price data set will not give you good results. So you need to, before using a Fourier transform, and Fourier transform is not equal to Fourier transform. There are different variants and ways how to apply a Fourier transform. It's just used as a term, Fourier transform. But let's assume you know how to run a Fourier transform. Then the other question is, what's the best way to pre-process the data you input in the Fourier transform? And therefore, the detrended price oscillator is a way to prepare the data to get good results from a Fourier transform. So I would call it, you need both. You need a way to remove a longer term trend. You need a way to remove short-term noise or fluctuations, which the detrended price oscillator can do for you. And using that as an input then to detect cycles or special frequency component in that data will give you information on cycles in the original price series then. So that's how I would explain those two terms and their relation or the differences in the context of cycle analysis. Emiliano, hope that helps. All right, you're running close to an hour, so yes, I'm back from my holiday, so excuse for taking a break for the past weeks, but I'm back with fresh energy, fresh ideas, and just here again once a week to have a discussion on cycle analysis together with you. So join me next week, Monday, same time, same place. As always, we are the foundation for the cycles, and we try to educate on different ways on cycle analysis and to always find something interesting which needs further attention by the science community, by you, and hopefully it was anyhow interesting for you. So see you soon. Have a nice week.